This is Richard Flax at MoneyFarm, talking about some of the things that have caught our attention over the past few days. Firstly, on Brexit, the Prime Minister needs to decide this evening, whether or not to continue negotiating with the EU. We suspect that he will, partly because we think the cost of not doing so would be relatively high in terms of a no-deal scenario. Not everybody thinks that way, but that's been our starting assumption, and so we expect negotiations to continue. In the US, the election is fast approaching, and the polling suggests that the Democrats and candidate Biden have a decent lead. Polls aren't exactly completely reliable, certainly as relates to electoral college votes, but more granular data around swing states and around the number of decideds and undecideds suggests that the Democrats have a decent chance of winning not just the White House, but potentially also the House and the Senate as well. And that so-called blue wave should help to make implementing their policy agenda a bit easier. What does it mean for markets? Well, there are really two competing factors here, we think. The first is around fiscal stimulus. We would expect to see a pretty meaningful fiscal stimulus soon after an inauguration, and that could help to drive economic recovery and economic growth. The second part is around higher taxes. The Biden plan calls for an increase in corporate taxes, and we think that potentially that could translate into 5 to 10% off S&P 500 earnings. And so the question is, how does the market think about those competing forces? And our starting thought is that if we did see weakness in US equities on the back of the expectation of higher taxes, it could prove relatively short-lived, particularly if you saw a meaningful fiscal stimulus, meaningful investment in infrastructure that could drive not just the economic recovery, but also potentially improve productivity growth, and potentially even perhaps raise long-term growth expectations. That's putting a meaningful amount of expectation on the efficiency of fiscal policy. So we'll have to see how that plays out, but that's our starting thought. Finally, with regard to COVID-19, we've seen an increase in the number of cases in Europe, and we've begun to see increasing restrictions as a result of that. And over time, you'd expect that to have a bit of a negative impact, a bit of a dampening on the economic recovery in Europe. And it really speaks to this sort of slow, uncertain recovery scenario that we think we'll see over the coming weeks and months. Thank you very much for joining us, and look forward to speaking to you again soon.